Analyzing the current technical levels of the S&P 500 index, which best reflects the overall health of the stock market, is a fundamental indicator for understanding investors' risk perception and the overall market direction. Despite the strong rally on Friday, let's detail why the weekly picture still appears cautious. Although the S&P 500 index recorded an increase on Friday, this jump was not enough to save the week, and the index closed the week down more than 1%. From a technical perspective, the most critical support level is in the range of 6,490, 6,512 points. This area represents the previous peak and trough in October and is essentially the last stand for the bulls. Maintaining this level is vital for the continuation of the upward trend. On the upside, the nearest resistance and pivot level is in the range of 6,680, 6,700 points. To ease selling pressure, the index needs to regain this area. Let's quickly look at some striking macroeconomic data supporting this technical chart of the S&P 500. The total market value of US companies has reached $68 trillion. Nvidia alone accounts for about 8% of the S&P 500 index. After the overall picture of the S&P 500, let's examine the situation of the Nasdaq 100 index, which is more sensitive to interest rates and keeps a close eye on tech giants. The Nasdaq 100 index, which is the barometer of technology and growth stocks, is the market that responds the fastest to interest rate expectations and mega trends like artificial intelligence. This week, let's analyze why the index is diverging more negatively than other indices and how the Nvidia effect is trying to balance this picture. The Nasdaq 100 index closed the week with approximately a 2% loss, performing weaker than the S&P 500 and Dow Jones. The critical psychological support level for the index is in the range of 23,841 to 24,000 points. A weekly close below this level could further accelerate selling pressure. For a short-term relief rally, the pivot resistance in the range of 25,000 to 25,250 points needs to be surpassed. The weakness in Nasdaq actually reminds us that the most vulnerable sector against the Fed is the technology sector. However, on the other side of the coin, data such as Palantir's 123% growth in US commercial operations in a quarter indicate that the AI revolution is still in its infancy stage, and corporate spending is necessarily shifting into this area. This battle between short-term interest rate concerns and the long-term technology revolution will determine Nasdaq's direction. Don't forget to subscribe to our channel and like our videos to stay informed about market developments. I wish you a week full of profits.